So you work with a lot of these businesses who spend all this money on enterprise software, and we've seen this software stock sell-off play out. What are the customers of these companies telling you on the ground right now?
Yeah, I mean, so first, factually, just looking at the sell-off, right? We're off about 25%, from the market highs in the fall, which is pretty significant when you look across the SaaS sector. As I've been running around and talking about this and thinking about what's the frame out, the thought that came to mind or the phrase that came to mind is SaaS is dead, long live SaaS. Sort of reach out to 16th century French, hierarchy changeover. The king is dead, long live the king. I think what you're seeing is, a shift, if you will, in the marketplace. Maybe a reconsideration of what the platform, critical platform dynamic is and what plays what where. In particular, the fear of agentics and how they maybe diminish or enhance, depending on how you look at it, the experience of the enterprise user and of the consumers, right? It's not just enterprise, platforms that are being disrupted, but it's also the consumer side of it too. So what we're seeing is really a reconfiguration across the board, across front office. How are these, companies thinking about selling the products? Certainly on the user side, right? With our user base, and by the way, with us even internally, as a services firm, looking at the entire, just landscape and saying, hey, how do we think about all of our relationships and what does this technology do for us, whether it's ERP or whether it's workforce management and certainly CRM. All those are at play in terms of the number of people who will have access and what additional technologies we might be using to enhance the value extraction from the same. So it's a real, just quantum shift, if you will, in terms of the approach and the use cases that are out there. And we're finally moving beyond, and I think this is the most important part, we're finally moving beyond like the POC of AI and seeing the impact, to the day to day. And that's really where the shift is becoming most noticeable, even for me walking through the offices that I visit on a regular basis within our own organization.
So you say that you see that impact happening at your own company and also amongst clients.
Yep.
Does that mean that your clients are spending less on enterprise software then?
No, I don't think they're spending less. I think there's a recontemplation of where the money is being spent. But I'll give you this example. If you walk through the M&A floor in a number of our offices, for example, in New York at 300 Madison, you see a lot of different screens. It used to be, the research pages and the PowerPoints and the slides that were open all the time. And now you see the black coding screens, right? Using visual design or Vertex or otherwise to create the workflows that are ingesting content using GitHub, right, to pull different application componentry in, and then of course, selecting LLMs and using the natural language, if you will, of the LLMs in order to actually interact with a lot of it. So we don't have a bunch of new coders who are hanging out in M&A, but we have people who've completely shifted the technology that they're using. So they're using all of the same stuff, right? All those same, technologies I mentioned, but then they're also using a bunch of new stuff. So I don't think you have like a complete shift, if you will, saying, oh, I'm not going to use, Office 365, or I'm not going to use, what I have with Google Workspace. I'm going to use it very differently, and I'm going to enhance my usage with this other technology.
So now, with all those tools that you see being used, I think that the question that is really scaring everyone right now is, hey, we know they're going to use the tools. Will that spend be with the existing slate of public enterprise software companies like the Salesforce, Atlassian, ServiceNow, all these big names? I mean, there's a lot of fear, we know the new tools are there. Are they going to move to startups? Are they going to stick with those big companies? How are your clients dealing with the issue of using startups tools versus the existing enterprise software tools?
Yeah, I think it's a great question. It comes down to trust, right? Like, I finally trust all of my OpenClaw to, take my kids to school and to answer all of my emails, but of course I don't, right? So I think it's a trust thing with the enterprise software, companies who we've always trusted. I don't see a complete divergence from them where people say, forget it. I don't need the most reliable platform, especially if you're in a regulated business. We're in a regulated business with everything we do in the audit and tax world, and a lot of our friends in SaaS, they supply very critical infrastructure software to regulated businesses, whether it's financial services or healthcare, and certainly in the public sector space as well. The mandate will be a high degree of auditability and reliability. You're not going to go and just say, oh, I can build an agentic, it'll take care of everything that's there. What you are going to say is, I can probably get a lot more value out of the things that I currently have with the use of this technology. One piece, and I think this is a critical mathematical, I guess item that we haven't really solved for yet is once you move from, inefficient to more efficient, right, on all of those platforms, how many people do you have that are actually using the technology, right? Which then gets into the usability and the way that they charge for the usability. Is it seat license or is it on consumption? I think a lot of these companies have already moved to consumption, right? We've seen that over the last couple of years. I mean, one of the first ones that did it was, over 10 years ago with like Adobe, for example, and their digital transformation. You're going to see that, continue to permeate throughout the ecosystem. That totally changes everything from the front office and how the salespeople at these organizations sell. It also changes how they bill. It also changes how they market the products and what they're going to embed in it, right? Especially if they can embed their own, AI and orchestration, but also how they think about partnering. And that's the most probably critical piece here is how they think about partnering with the AI companies to ensure that you have the best ecosystem dynamic, right? Whether it's how these the NPCs work, and then also the APIs themselves, so that you have the open architecture, so that the new tech actually allows the quote older or more established platform tech to be most efficiently deployed.
So in this world here, there where with the usage-based pricing ends up making up for the reduction in the number of seats, for example, that you have people using the software, which I think is sort of what these companies are saying. They're saying, you're worried about revenue declining. It's not going to decline because of the fact that we are going to implement and really build out these usage-based models. I mean, still the ROI then comes from, well, I'm paying people less. Essentially, I have less people headcount wise, or maybe I'm not growing as quickly. And so the thing that I've been wondering, and I'm hoping you can help me out with, is where do those cost savings then get used? I mean, sure, you could pay it out to shareholders, fine, but what will they be investing in next if it's not hiring as many people?
Yeah, well, I think it's gonna be a couple things, and it's gonna depend on frankly the ownership structure, and it's also gonna depend on what markets it's playing in, right? So if you're taking costs out and repackaging it because you're a private equity owned enterprise, right, a software company or services company, private equity is gonna benefit from that. Then of course it's gonna be the shareholders of private equity. If it's a privately owned organization, that's going down and remitting back to the shareholders and the owner operators of it. I think in the public enterprise, you're going to see reinvestment in a lot of the things that they're already have been doing. And then the last one, and probably the most important one that you guys have done a fantastic job reporting on, is the deployment into capital. Right? We've seen this incredible rotation out of software margins, which we're talking about here, into hardware margins. You also then see this desire, so to say, or really maybe it's a critical feature of future relevancy to own the infrastructure, own the GPUs, own the TPUs, and own the power, right? Savings are not going away and going straight to shareholders. I think in most cases, I think they're actually going and being reinvested in other parts of the business, both to create new products, to generate demand. So just pure demand generation, going and finding new customers globally. You still have an entire consumer group that is largely untouched in a lot of parts of the world. And then the final bit, of course, is that the most reported piece is the capital infrastructure part for so many companies that are playing in it, right? Whether you're a pure hyperscaler or a neo cloud or somebody right on the I won't say fringe, but on the edges of that. That investment base is really important because if you look out 10 years, perhaps the new form of capital, the new form of monetization of everything is not necessarily, what's the amount of quote, software license income that you have, but it's the how much of the compute do you own and how much runs through your infrastructure,
So,
which really
so basically, it's a story where it's like a financial services company, for example, that has been able to reduce their cost base. They now have more money to spend, and they actually might look out to more vertically integrate their own tech stack and some of their own capital infrastructure in the background.
100%. I mean, I talked to a bank this week when I was out in Texas, and the input from them was, "Hey, like this is a great opportunity for us to like go back and reinvent, ourselves. It also gives us more deployable capital to go do more investing, right? So if you're an investment bank, it's the I'm saving money to go put it other places. And oh, by the way, back to the efficiency point, if I in fact am a lot more efficient in the things that I'm doing because this technology is actually better, and I think the answer to that is it is." that means I have the ability to look at a lot more deals. I also have the ability to spend more time, with the founders or with the executives of the companies I'm investing in. And that's a really big thing. We're seeing the most change in terms of mindset in this in private equity. In fact, we have two pieces coming out, one that launched this week and one next week on the thought leadership side about the impact of tech and private equity and how it's affecting their inputs there. My partner Alex Baker did one of them. It's going to be I think out next week. And then also the platformization dynamic, right? I think you have a lot of work on the software, companies themselves saying, hey, how do we reinvent ourselves? How do we go out there and actually show the value that we provide, especially in those critical, spaces like the regulated companies, but also, the ability to find new customers is a real important one. And a lot of work being done by the pure SaaS players, in a search for relevancy.
Great. Well, Dallas, I want to thank you for coming on. A great conversation as always. That is Dallas Dolen, a leader in the tech media and telco practice at PwC here on TITV.